more into how to actually trade what we've learned. And so with that being said, I want to mention this when we look at our example here. Now, as I stated before, after that, the close of the third bar, if you're in, you want to exit. But now, as far as entry, if we were considering an entry here, I'm not saying that you should enter at the close of that third bar, but I will say that you should start anticipating a market turn or a attempt to turn here, and you want to get out just to be safe and preserve the profits that you have. But now we see that the next bar after our third bar is indeed an attempt to turn or an up bar. So if we were to adjust our dynamic support and resistance the way we should now, this green bar, the high of this green bar, so we would move a dynamic resistance up to here now, because we see here we have a turn, we have a red bar, and before this green bar we would place dynamic support and resistance. Dynamic support would be the close of this third bar. But now we don't want to discount the low of mother here, this outside bar, which is outside to these inside bars here. And because as we know with outside bars that they are within themselves support and resistance, so when we're looking at this, we're actually going to use this as our low, even though a dynamic support would be here. The realistic and logical common sense low would be here. And actually, when we look at the low of this green bar here, we see that it did indeed respect the low of this outside bar. Okay, so now let's talk about entries for a moment. And actually, since this green bar here actually made a little higher high than this bar, because the high of this bar is 204.91 and the high of this bar is 204.97, so we'll move it up to here. And don't worry about what the numbers say over here, because we don't want to get too fine and just waste a lot of time trying to pick the exact, but you get the idea here. But now once we get the red bar, we have a market that's turning or attempting to turn. So now we want to consider a short entry, and that gets us into what I call pre-pivot entry. And we, under our LCM guidelines, we know that we want to enter on a pivot, pull back to the pivot. So if we had a close, actually, because we did not get a close below the low of this bar on this bar here, so this bar would not be the pivot reversal bar. In fact, this bar would be the pivot reversal bar if we're looking at a short in this area here, because this is the bar that closed below the low here. Okay, let's back that up for a minute. I had to pause and think about that for a moment, because I don't know, I guess I just had a little brain fart here. Excuse my language, this is just a term I get when I say something stupid. But actually, this is going to be a pivot bar here. This is going to be a bear pivot bar, because this is our swing bar, because this is the bar that made a highest high. and when we had a close below the low of this bar, which we did on this bar, then that would be a pivot reversal bar right here. Okay, and then we did in fact here pull back up, test the pivot point, and close down lower on the third bar down. Okay, we actually did not break support on the third bar. Now you say, okay, well, what about the rule of threes? And we're going to pick that up in the next section, section 7, and we'll talk a little bit more about how we would interpret this when we want to look at and use our rule of threes. So I'll see you in the next section.